Welcome to this explainer. We often think of modern corporate finance as something cooked up in the towering glass skyscrapers of modern-day financial districts, carefully engineered by armies of analysts in expensive suits. But the truth is actually much stranger, and honestly far more fascinating. The foundational machinery of global capitalism was actually cobbled together way back in the 17th century by a group of merchants in tights and breeches. It's this incredible story of extreme risk, deep historical irony, and completely accidental innovation.
All right, let's kick things off with a number that is frankly just hard to wrap your head around. $7.9 trillion. That is the estimated peak valuation in today's money of the Dutch East India Company, also known by its Dutch acronym, the VOC. I really want you to try and imagine a single enterprise more valuable than today's modern tech giants. We're talking more valuable than Apple, Microsoft, and Google combined.
So this brings us to the absolute core question of our story today. How on earth did a quest for something as basic to us today as nutmeg accidentally invent Wall Street? The high-stakes, incredibly dangerous world of the 17th-century spice trade seems a million miles away from the complex machinery of modern global finance. But as you're about to see, they are intimately connected.
Section 1. The Quest for Spices.
To really wrap our heads around this, we got to look at the massive European demand for Asian spices at the time. We're talking nutmeg, mace, cloves, and pepper. And these weren't just flavorings for food. They were used in medicines and were the ultimate status symbols in Europe. Because the Dutch had figured out new oceanic routes that bypassed the traditional middlemen, the potential profits were absolutely unprecedented. I mean, the VOC could sell these spices in Europe for 14 to 17 times the price they paid for them in Indonesia. But there's a catch. These early private spice voyages were extraordinarily dangerous. Before the VOC came along, smaller temporary groups called pre-companies would pool their resources just to fund a single voyage. If a ship sank, or say it was captured by the Portuguese, the investors literally lost everything. It required stomach-churning risk just to execute one single trip.
Section 2. A very expensive monopoly.
So, to stop competing against each other and to really stick it to the Spanish, the Dutch government basically forced these smaller, scrappy outfits to merge into a single, massive 21-year monopoly. This was the birth of the VOC. And to fund this absolute megacorporation, they did something completely revolutionary. In August of 1602, the VOC held what we now recognize as the world's very first initial public offering, or IPO. They opened the books, and everyday Dutch citizens, 1,143 of them, ranging from your local bakers to super wealthy merchants, were invited to buy shares. Together, they raised a staggering 6.4 million guilders to fund this unprecedented enterprise.
And trust me, they needed every single penny of that cash. See, the VOC wasn't just a trading company. Its charter essentially gave it quasi-governmental powers. They had to build forts, maintain standing armies, negotiate international treaties, and fund a massive permanent fleet of warships over in Asia just to fight off rival European powers.
Now, this massive war chest gave them a huge leg up on their main rival, the English East India Company. While the English were relying on short-term capital, raising money for a single voyage and then paying it all out when the ships returned, the Dutch eventually shifted to permanent capital. This let them continually reinvest their profits into an infinite loop of building more ships and more forts, which allowed them to completely dominate the global trade for the better part of a century.
Section 3. The 10-year trap.
Okay, so how exactly did the Dutch get to that permanent capital? Well, it's actually a massive historical twist. When it was founded in 1602, the VOC charter explicitly promised investors that the company would liquidate and return all the capital, plus any profits, after 10 years. It was a lock-in, sure, but only a temporary one. But by 1612, when payday finally arrived, the directors found themselves with a huge problem. All the cash was tied up in Asian forts and warships. They physically could not pay the investors back without entirely dismantling their new empire. So, fully backed by the government, the directors simply ignored the planned liquidation and flat-out refused to give the money back.
This blatant breach of contract, which was essentially a massive expropriation of investor funds, totally accidentally invented the modern concept of permanent corporate capital. By keeping all that money locked in indefinitely, they created the shockingly stable financial base that you absolutely need for long-term global operations.
Section 4. The accidental stock market.
Just imagine the sheer panic of those 1612 investors. Their life savings were completely trapped. Because the company wouldn't pay them back, investors furiously demanded a way to cash out. And the radical new solution was exit via sale. The vogue allowed investors to freely transfer their ownership claims to other people. So if you wanted your cash, you simply sold your shares to someone else. And just like that, they instantly gave birth to the world's first highly liquid secondary stock market.
And what happened next in the courtyard of the Amsterdam Exchange was just explosive. Desperate and opportunistic Dutch traders started speculating wildly. Almost overnight, they invented the exact financial instruments we use today: stock futures, options trading, short selling, bear raids, debt equity swaps. All of these incredibly sophisticated and frankly crazy financial tools were being traded hundreds of years before Wall Street even existed.
Naturally, this chaotic new market brought some serious drama. By 1622, we see the very first instances of shareholder activism. Furious investors were actually publishing pamphlets protesting the company's directors. They accused the management of market manipulation, short-selling their own company's stock, self-enrichment, and severe conflicts of interest. They demanded that shareholders actually have a say in how the company was being governed.
Section 5. The Modern Corporate Blueprint.
It is truly wild to think that this piecemeal, desperate engineering became the exact blueprint for the modern multinational corporation. I mean, none of this was planned. It was all just a series of forced adaptations. Look at how perfectly it maps out. The VOC's joint stock ownership gave us today's publicly traded companies. Their massive exit via sale crisis, that created modern stock exchanges. The legal shields they built by 1623 gave us limited liability, and their flat refusal to liquidate in 1612 established fixed permanent capital. The fundamental building blocks of capitalism today were literally cobbled together by 17th-century merchants who were just trying to survive extreme risk. However, it is absolutely vital to understand the full context of this explainer. The VOC's incredible financial success, their high dividends, and that quasi-governmental power, it all came at a horrific human cost. The historical sources note that while Dutch profits soared, the local economies of places like the Spice Islands were entirely destroyed. The company's dominance heavily relied on devastating violence, the use of slave labor, and the severe exploitation of local populations in order to enforce their monopolies.
Which leaves us with this final, pretty provocative thought. The VOC pioneered corporate governance, high finance, and the massive multinational operational structure that completely reshaped the world. Today's megacorporations operate on the exact same DNA engineered in Amsterdam over 400 years ago. So, considering their immense global influence crossing borders and shaping economies, are today's massive corporations really so different from the VOC of 1602? It's definitely something to think about. Thanks for joining me on this explainer, and keep questioning the world around you.